Good evening, ladies and gentlemen. This is Nicholas Balajic speaking. I would like to welcome you to 4Trade special webinar organized on the occasion of one of the most important reports for financial markets. Of course, as the title says, it is about non-farm payroll, or shortened NFP, in the United States. At the beginning, I would like to put a stress on a risk warning, since we are speaking about margin trading, and we are actually dealing with margin trading, which means that these financial products involve the leverage. It is very important for every trader to become familiar with trading conditions and potential impact on your capital, your deposit funds on your trading account if you decide to trade. Of course, it is very important that according to risk warning and disclaimer, and to be aware about potential losses and probability to lose all the money that you deposited on your account. Regarding the main topic from today's webinar, okay, let's start with it. Actually, the NFP report that will be released on Friday, June 2nd. This is one of the main macroeconomical reports from United States, and it is about labor market. Now, on this slide, we see actually the content of webinar that will pass all this, let's say, thesis. First of all, we speak about NFP report itself, its importance for the market or for the US economy. Then we'll discuss shortly about relation between NFP report and Federal Reserve monetary policy, why the non-farm payroll result is actually so important for the Federal Reserve chairman and Federal Open Market Committee members in their voting for interest rate decision. After that, we will elaborate the similarity and differences between non-farm payroll and unemployment rate. What is actually so important in core of this result that will be released on Friday in the beginning of United States trading session. After that, we'll discuss what we can expect from this week report. We can compare some different results from the history. Also, we'll show what was the impact from history on some main trading instruments such as gold or the basket of dollar currency exchange depicted in US dollar index. And then we'll also show some few things regarding the technical analysis and of course some market opportunities that can be actual not only during the day when the report will be released, but also the days after that, and let's say next 2 or 3 weeks in between report is published and the Federal Reserve meeting, which is scheduled for the middle of June. In the beginning, let's discuss shortly. Actually, I would like to explain what is NFP report about. Non-farm payroll report is actually a variety of employment measure. As the name says, non-farm payroll actually shows the number of people employed in private sector. Because private sector is very wide defined category, the methodicians and the people actually that constrain this report is are actually showing the number of employed people in whole the economy excluded from from people employed in the public sector, also the people that are dealing with agriculture on farm, also the maids, actually the housewives employed in the uh, household owners, and also the people that are employed in civil snowstorm security service in United States. Basically, this report is about to show the trends of employment of the people in sectors that are productive sectors that are bringing the value to the economy. The difference between this result and other results that also measure the let's say the similar things is that on the sustainable path for development in one economy, the private sector, which actually should have the main role in accelerating the economy, should also add more and more jobs. And if it is the case like that, the economy should go on positive positive trends. Now, when we speak about the numbers itself, uh, the traders should pay attention to two different kind of data. First of all, the number itself um, has a positive correlation between trends and impact. The greater number of employed people in private sector should have better and positive impact on the economy that this report is really related with. But also, what is very important for traders is that the difference between expected number and actually released number is also very important. If the difference is let's say narrow, the impact on market will be very quiet, almost without any impact, or even may go in opposite direction because the expectations are already priced um, in current current price. From the other side, what the traders are also looking for is the correlation between result and impact on different instruments. In the last, let's say, 12 months, the usually expectations for this result were around 180, 185,000 new people employed in private sector. Let's say the range of expectations in last 12 months were from 164 to 205,000 new jobs in private sector. And when we understand about actual results, there is slight difference because the range is a little bit wider. We got very different results, varying from 38,000 employed, for example, in May 2016. That was very disappointing result, to 2,800, 287,000 employed in the following month. So the correlation is here the very obvious. When you have the expectations that are almost 200,000 added jobs in the private sector in previous month, and you have results such as let's say less than 100,000, the impact on the market is very big and obviously in a negative direction because results are disappointing. The difference, as we said, the difference between non-farm payroll and unemployment rate, which comes together with this result at the same day, is that NFP is just looking for, let's say, real employment trends. It is very important for each economy to follow up the dynamics of some measure and also to follow up trends and perspective for the future. NFP, it has non-farm payroll, gives you a possibility to track all the history and to compare it for the future, which is not the case with unemployment rate, because actually the unemployment rate just measure the people that are actively looking for the job. Okay, now people that are not actively looking for the job and still are not working are not counted the in the unemployment rate. So those are actually the people that also supposed to participate in the economic activity, but they decide not to do that. There is a big difference, because this group of people can have very artificial impact on unemployment rate, but this is excluded in case of NFP. NFP is just looking for the absolute numbers. Let's say for the last 2 years, the actual number was all around 200,000, let's say in the line with expectations, usually in past 24 months in average. As I said, how to read the results. The higher number is better for the country, is better for the economy, and later on we will discuss about exactly numbers and expectations for this month, and also the impact from the history. The correlation between non-farm payroll and Federal Reserve monetary policy is just about few things that we already mentioned. As NFP is result from employment field, the one of the core target of Federal Reserves is actually to make to obtain price stability from one side and near to full employment from the other side. Let's say to balance between aggregate supply and aggregate demand. That's the reason why Federal Reserves decide to watch closely the NFP result. As I said previously, the unemployment rate can fall artificially because group of the people that are not actively seeking for the job just are excluded from this number, but they are not actually employed. They are not participating in consumption because they don't have funds to finance their consumption independently. So the main reason is that NFP, from the Federal Reserve point of view, have the crucial position in the clearing of interest rate decision that Federal Open Market Committee is conducting eight times a year, together with CPI result, which is connected to inflation or consumer price index. NFP is also very important because it shows dynamics and potentially more people that are employed will spend their income in future, and on that way they will have the impact on the inflation and consumer price index. And when Federal Reserves want to make, let's say, balance between those two things, if they anticipate higher consumption in the future, they would like to have an influence on that by the hiking of interest rate, and they want to, let's say, make discouraging of consumption in future to keep it under control. As we said, the NFP is actually showing the stability in private sector. It's showing trends. It's showing the perspective for the future production and also perspective for the future consumption. That's why it is very important from the point of view of Federal Reserves. The Federal Reserves in the history, they were more they were more um, directed to unemployment rate. Let's say in past in 2013, 2014, they were tightening their monetary policy to the unemployment rate with a target of 6.5. But in the meantime, when they so actually the difference that the private sector is not adding new new jobs, they decide to postpone the tapering, and they postponed actually increase of interest rate. Now they are more directed to the NFP, which is showing the real results in every month, and based on that, they can make, let's say, more precise forecast for the future consumption, and based on that, they can make decision whether they would like to increase interest rate or not. Basically, this result is very important for not only the U.S. economy. It's important just because of connection with the Federal Reserve monetary policy. It's important also for worldwide economy, because the dollar is the most participating currency in global transactions. Let's say all the loans that are obtained by the International Monetary Fund, by the World Bank, are denominated in dollars. Also, the majority of international trade is settled in dollars. The global presence of dollar is on very high level, and that's why this result indirectly via interest rate decision can make impact on each economy in the world. Now, when we are discussing on market behavior in the moments of NFP release, let's say that the history shows that on the day when the NFP is about to be released, usually the European session is very quiet, um, because all the traders are waiting, they're focusing on in the afternoon hours. The United States session starts, and upon releasing the results of the NFP, the markets start to move. Most of the time, the fluctuations are in the both directions, and the main reason why it's happening is because the uh, majority of trades in first hours of let's say not hours but first minutes after the NFP is released are done by robots, by softwares, by supercomputers that are actually programmed to follow up the trades and to stream hundreds of trades, hundreds of order in a second or minute. Or that's why actually the fluctuations in that moment are very high. The market is very busy. The volatility is rising, and in that moment, are actually traders are uh, um, using opportunities or going in the opposite direction, losing money. That's why it's very important for you to follow up all the news and to be on on the safe side when we are speaking about the trade. Actually, every single report that has a huge impact on the market have the same outcome. The speculators, robotic trading, automatic trading is very well included in this reporting, and that's why the volatility and fluctuations are very big. And sometimes market in short term, in the very super short term, it's going in opposite direction from the fundamental logic. So that's the thing that is actually out of hands of any one of us, and we should just uh, um, let's say comply with this fact, and to be ready that something like that can happen. Um, Also, what is very important that non-farm payroll report and unemployment rate report can have the different outcomes. For example, unemployment rate can have worse than expected result, while the non-farm payroll can have the better than expected result. All these things come just actually because of the statistical methods that are including the people that are actively or not actively seeking for the job. So these two things can actually, let's say, make a confusion on market for the short term. But the NFP report is something that have higher impact, higher final impact on market, and indeed has the higher importance for Fed officials in their decision making. Um, let's get back a little bit to the history. The previous result that was published on May the 5th actually showed a better result than expected. Uh, Usually, analysts and economists are giving few days ahead their opinion about result. The average value of their opinion is actually published like forecast or expectation. Now we see that expected number of people that supposed to get job in previous month, in that moment. Actually, this is regarding the April, for the result that is published in the beginning of the May, were 185,000, while the actual result was 211,000. It's very important to put a stress on the time. This is traditional. The first Friday in the month, the NFP and unemployment rate is published by Bureau for National Statistics. Actually, this is the Bureau of Labor Statistics, this Department of Labor Statistics that published this result, and also the unemployment rate that remain unchanged, 4.4% in May in comparison to the previous month, to the April. Now, the expectation regarding this result are that in May, the private sector added 182,000 people actually to the workforce. It means that 182,000 working places were open in the previous month. The result will show actually what was the exact number, and based on that, we'll see the market movements. In that moment, in that particular moment, on the 5th of May, despite of good result, dollar index fall per 0.22%. Nevertheless, the job report actually indicated a bullish impact, but in the same time, also the price of gold lost 0.43% of its value. And let's say that correlation between value of the dollar and price of gold is supposed to be negative. So when the dollar is gaining the value, the price of gold is actually supposed to lose its value, and vice versa, which is shown in majority of the cases, but the previous one was not that In the previous case, that was not the situation. For this month, for this report, also it is expected that unemployment rate will remain the same, 4.4%, and in previous month it dropped down to 4.4 from 4.5% in March. The things that I just started to actually to explain is very big correlation between results of NFP and actions of Federal Reserve and their impact on the global economy. Let's say that in this moment, Federal Reserve, which is not typical national bank, it's actually the group of banks that are dealing with monetary policy, and they are in charge for the monetary policy in the United States, and they're in charge to follow up and to hold prices under control in the United States, just because their main tool regarding their target is the interest rate. Basically, they are just making the actions for the whole global economy, because majority of the global debt is denominated in dollars, and when Federal Reserves rise interest rate, it means also more expensive loans and credits for the countries that are actually getting money in dollars, that are obtaining the debts in dollars. So that's why it's very important. And after the NFP report, we should direct our views to the Federal Reserve meeting, which will be held on the 13th and 14th of June, with very high percentage of probability that interest rate will be increased on that meeting. More closely, you can follow up by daily news, and also on the website of For Trade, where we are publishing the analysis from our research department regarding this topic. On this table, you can see the some of the results that are published in last, let's say, 15 months, and their impact, direct or indirect impact on the price of gold and value of dollar index. Here you can clearly see the first of all, the previous month we discussed about it. The result was better than expected, but the impact was negative on both instruments. Usually in past we can see the compatibility between result that was published and outcome. For example, in the month before, in the beginning of April, when the result was dramatically lower than expected, the expectation was 190,000 new jobs in private sector, and the actual results show 98,000. In that moment, price of gold jumped 0.66%, and in the same time, the value of dollar, comparing to six major currencies, fell 0.38%. Now, when we focus on this price, is 0.66% on the current price of gold is about $8.5, which means that in the trading per one lot, which is 100 ounce, potential profit could be, let's say, between $800 and $850. And if you were if you take the wrong decision, also the eventual risk would be at the same amount. We said that the highest impact was in the previous time, it was when the result was dramatically lower than expected, only 38,000 new jobs in the private sector. It was on 3rd June 2016. Price of gold at that day fluctuated 2.14%, 2.14%, and value of the dollar dropped 1.61%. Also, the highest positive impact was when the following month, when the result was much better than expected, 287,000 in comparison to 275,000 expected new jobs added to the private sector in that day. Price of gold fell 1.45% and value of dollar gained some 0.55%. Now, I would like to share with you some market opportunities that came from our research department. Our analysts see the opportunity for euro dollar based on currently accessible information, also including the results that were published today regarding the inflation in eurozone that was much lower than in the previous month, including all other impacts from, let's say, geopolitically point of view, macroeconomic point of view, expected some political impacts from elections ahead of us in European Union, etc., etc. Now, regarding this file, I would like just to make some comments. Our analysts from research department see the intraday, weekly, and monthly trend, like uptrend. The critical point is 1.1231, and in the short term, the support one is 1.1208 and resistance one is 1.1254. Now, at the following table, you can see the calculations about potential profit and eventual risks in the case of each of these three lines, support lines and resistance line, will be touched in comparison to one lot open position on euro dollar. One lot that contains 100,000 euros that were traded for dollars or vice versa. What is also very important here is to make, let's say, closer calculation for weekly and monthly results. And in this case, for example, in the case of weekly orientation, also the expected trend is uptrend, and the difference between critical point for entering in position 1.1231 and first resistance line is which is on 1.1267 is 36 pips, which means that in case of trading with one lot, potential profit in that case could be $360. And in the opposite direction, when we are comparing to the support line one, which is on 1.1107, the difference is 124 pips, which means that eventual risk in the same situation, considering this critical point, could be $1,240. So $360 of potential profit with resistance one, and $1,240 eventual risk in case of support one for the weekly outlook. And from the monthly outlook, there is a little bit different numbers, since resistance level is on 1.1330, which means that the difference is almost 100 pips, actually 99 pips. In that case, potential profit could be $990, and in comparison with eventual risk if price will touch the support one level. In that case, we have 391 pips of difference. Potential risk, eventual risk is $3,910 if we consider this critical point for entering point in position. Let's pass now to the second market opportunity. It is regarding the British pound. This is something that can be also very interesting because in between two reports from United States, from one side, the NFP that will be published on the 2nd June, and interest rate decision that will be on 14th June. We have British elections, UK general elections, and currently, according to the YouGov polls, there is a very narrow difference between ruling Conservative Party led by Theresa May and Labour Party led by Jeremy Corbyn. These polls are actually saying that only 5% percentage points is the difference between these two parties, which can actually change the number of participants in the parliament and bring down the number of seats that are actually, let's say, under Theresa May's hand, and they can increase the number of seats that are under the orchestra of Jeremy Corbyn. This is something that traders and investors consider quite uncertain for the British pound. Now, when we are checking the critical points, this is something that in this moment might not be relevant, but if the market will again fall to the same critical point of 1.2866, our analysts are seeing the uptrend for the intraday time orientation. After that, they see the downtrend for the weekly, and again uptrend for the monthly. For the monthly time frame. In the following table, you can see also the expected results in when you take in consideration the critical point and resistant one and support one, based on one lot trading, how much money you can potentially earn or how much money you are risking in that situation. I would just also like to add two calculations regarding the monthly and weekly orientation, considering the same critical point, 1.2866, and resistant line, which lies on 1.2976. The difference between these two levels is 110 pips in that case. Weekly trend is downtrend, so this is considered to be the eventual risk of $1,100 in comparison to potential profit of almost $1,500, actually $1,480 because the support line is 1.2718 and the difference is 148 pips. And on the monthly level, in the monthly trend, also uptrend, the difference between critical point of view 128.66 and 129.87, 113 pips is 121 pips is the difference, which means that potential profit is $1,210, and eventual risk in that case, if price will fall until support line, is 153 pips, which brings you eventual risk of $1,530 in case of monthly time frame orientation. And the last one is the market opportunity on gold, also based on one lot calculation. The same thing is actually that hits the dollar according against the euro and British pound, and also the gold in the same time with the NFP result and Federal Reserve interest rate decision. Also, in this case, our research department is seeing uptrend in all three time frames, so in intraday, weekly, and monthly, with different targets. In the following in the following table, you can see also the calculations of potential profit and eventual risk. So you can consider your trades. You can consider your trades with some of these significant level for the market. Um, Here, we will stop because actually we are in the end of our today's webinar. I would separate a few minutes for the questions. Um, if there is any, I would just like also to remind you to follow up the tomorrow's results regarding the initial jobless claims and ADP that are also connected to the labor market. So next 2 days are very important for United States economy. Uh, Actually, in next 2 days we can get a lot of information that can just make easier our trading and our analysis for the market. If we get better result than expected, most probably it will have a positive impact on dollar if market will go in line with expectations and also with results. And also potentially it can boost the probability that Federal Reserves will increase interest rates in the middle of June. Um, Now, the question was that what is the expectation for the result that is expected to be announced on Friday? Currently, expectations are 182,000 new added jobs in private sector in the previous month, and also the unemployment rate to remain on 4.4% over the previous month. And so the next question is regarding potential potential outcome. Now you can see the table that actually show you the previous reactions on market based on different results that were published in comparing to the expectations. So actually everything depends on this difference between actual result and expected result. Uh, let's say that market will have very light reaction if the difference between actual results and expected results will be lower or narrow. If the difference between actual and expected results will be higher, also the impact on the prices will be higher. But also you should have in mind that in the same time there will be published few different results from the labor market fields. It's also including the wages, the unemployment rate. So all these results will have, let's say, the final impact. And if they will be in average better than expected, most probably it will have the bullish impact on the dollar and consequently potentially bearish impact on the gold. Okay. If this is if this is all, I would like to wish you successful trading. Also, and just to remind you, for tomorrow and the day after tomorrow, those actually 2 days are very important for U.S. economy. Pay attention to that, and necessary, if necessary, pay attention to your equity and consider the possibility to increase your equity during the period of higher market volatility. I wish you pleasant week, pleasant afternoon and evening. I wish you all the best, and talk to you soon. Goodbye.